Good afternoon and happy Friday, everybody. Welcome back to Markets for Millennials for our weekly market wrap from this shorter week from February 22nd through the 25th. And obviously, Monday was a holiday here in the United States, and so the US equity markets were closed. And before I get started, just want to just say, my heart goes out to the people of Ukraine. My prayers for the people of Ukraine. Just war is not a good situation. No military conflict is good, and I on my career is I'm a history teacher, and I just know that one thing I teach my students a lot is that in war, sometimes there are winners, but everybody loses. And definitely my heart goes out to them. My prayers go out to them. And it obviously feels this week that talking about the markets maybe seems a little shallow because everything pales in comparison to the value of life. And so I do not want to diminish that at all. Um, and so I'm going to try to keep this short today. But I just want to take a look at a few things. First thing I'd like to do is I recently launched a newsletter. And so actually I could probably try to zoom this in a little bit on the page. And if you go to my Twitter profile at Mr. J. Thomason, you can subscribe to my newsletter. There's a free subscription, and then you also have the opportunity to become a member, a paid member. Paid members will be getting more content in the future, more exclusive content, more exclusive insight, more depth. So I just wanted to plug that if that's something you're interested in. As sometimes in these videos, you don't get quite as deep into the details, and on that newsletter, I provide stock picks and things like that, fundamental analysis, learning corner, and things like that. Okay, so what I wanted to do is I wanted to start off on the gold chart. You can see on the screen, you can kind of see the watermark XAU, it's gold. And what I thought I would do is go to the 1 hour chart so that we can kind of see what transpired this week. So if I just include maybe the last 5 days on the chart, just this week. So we had gold consolidating underneath this overhead resistance at 1916. Now, actually, let me come back here because basically ever since the whispers of conflict had been occurring over the last few weeks, we've seen gold make its rise. This is something that I have talked about on Twitter quite a bit, and have been suggesting that because of this rounding bottom price action, that gold's time was coming. And these things you can never truly predict. You never know exactly what is going to transpire or what is going to cause it to take place. And you don't know how quick the move is going to be. And so I guess my view on gold right now is that I'm cautiously optimistic, whereas maybe before like at the early part of last week, I was very optimistic about gold making a move. So let me just give you the overview, the big broad picture overview. Gold is in a new uptrend. Obviously, we're if you want to go back all the way to the over $2,000 high, then obviously we haven't gotten back up to that level yet. But we have cleared a lot of the really important levels. We've gotten into the 1800s, got above 1830, got above 1875. And so, and we haven't made a lower swing low. So we've got, if I just show you here, we've got a low here. Oops, I don't know why that just happened. We've got a low here, we've got a low here. And so you can see the lows are getting higher, and that's definitely a good thing. And up until we broke on this really big candle on February 11th, we hadn't made a higher high than November 16th of 2021. But the big picture is that gold is still kind of rolling upwards. And this kind of rise, if you really think about it, from a couple weeks ago when I talked about gold dumping from this close to just before we had the crazy price action on yesterday. Um, Gold had been up almost 7%, which is not normal. Gold's a slow mover usually. So those quick price movements, like what we had in 2020, either to the downside and then the quick recovery, and then the really quick from late July and into early August of 2020, that like those are not common. And usually they come off pretty hard if they move up pretty hard. So the way I'm seeing this big picture wise is after this move, I mean, if you go from from the close of January 28th to the peak, it's 10%. So and that's a very very steep move in just a few weeks, in less than a month essentially. So um, so you're always going to get that type of move retraced. So gold is that's potentially healthy, but I'll talk a little bit more about the near term price action in just a second. But gold is still technically kind of rolling upward. So I'm optimistic in that sense, but I'm cautious because again, coming in a little bit closer, um, this is the type of candle. It's like a reversal candle of sorts, um, because you had just a huge green spike up and then it gave all of it back. We had basically from top to bottom. This was $100 swing just about, and we closed red. And then today, after trading up above this critical resistance at 1916, we not only closed red but actually made lower lows going back to last week, lower closing lows, I should say. Um, and so this is a sign to me that we're bound to come back, and we could, if we're going to maintain the uptrend, then we're either going to catch this support and then roll up, um, or and that support is at 1875, or we're going to come down to this trend line support around 1832, 1830, and then roll up from there. And by doing that, we still would be able to maintain this kind of rolling uh, ascension. Um, so if I zoom back in, and I'll show you this on a couple of charts, but if you just look at how how things transpired, so Wednesday, as we went into the night, into the overnight hours where it's daylight on the other side of the world, you began to see. You began to hear about the Russian troop movements in Ukraine, and gold is the ultimate safe haven asset. And you just see gold just go boom. Like, I mean, these hourly candles are insane to the upside, especially this kind of last one, which was about 2 in the morning on Thursday morning. It was a 1% candle in 1 hour, moving $20. And again, on a slow mover like gold, it's a huge thing. And then we ended up retracing and then closing down below. So this is intraday. So, this move, if you just think about it, from the top down to the wick bottom, we're talking about, what is that? It's like 9 hours that we had this $100 price swing. It was just insane. And then if you look at, for example, like the NASDAQ chart, which I had been watching, and a lot of people have been watching equities. I'm just using the NASDAQ because growth is like the antithesis of risk off. It's risk on. And so you actually see price come down, and then maybe an hour or two, or once the markets opened once the New York session opened on Thursday morning, you just saw everything get bought back up. And actually, I think if you look at the Dow, no, never mind, not on the Dow. I was gonna say the Dow I think might have been better, but actually the Dow had a better day today than the Nasdaq. But that's just to show you that. And then Bitcoin was kind of the same thing. We had a massive sell down, and we were. What's crazy to think about here is just this V right here is a price move from top to bottom to top. We're talking about $5,000 of price difference that took place between, we'll say right here, about 5 a.m. on the 23rd and noon on the 24th. Then that's Pacific time, so that would be what is that? That would be 8 a.m. Eastern time on the 23rd and 3 p.m. Eastern time on the 24th. That's just a ton of price movement in that short amount of time. And I made a tweet about how that's why you don't try to day trade or scalp on Bitcoin unless you're a expert, and there's not very many of those out there, at least profitable. So anyway, you saw that kind of move on all these assets. And another one that I thought was interesting, where's my, I think it's this one. Yeah, here it is, my oil chart. You kind of saw the same thing. And a lot of this is centered on the idea of Russia. Obviously, Russia is one of the largest oil producers in the world. Russia provides a lot of energy for Europe. And there's a lot of debate out there about energy independence or dependence, I suppose, that a lot of people or a lot of nations have on on Russia, and that this is a really big deal for that reason. And so you actually see at the risk of war and in the potential response of the U.S., you see price of oil just come up. You saw WTI go over 100, and then it has retraced back. And you actually can see here on this hourly chart, we came down and then bounced and then are making a lower low, and that's on the hourly chart. On the daily chart, I've been following for a while. When I have shown my WTI chart from the beginning of December, you see this ascending trend line. And we've kind of just been back and forth. I'll probably have to adjust this. I mean, just it's one of those things where you just have to pick a level and stick to it. And then when the market proves to you that your level or that your line is wrong, you adjust it. And in this case, I picked this because at least up until this February 16th candle, there had never been any closes below this line. So then you see a couple of closes below, and then a spike above, and then closes below, and you see that now it's acting as resistance. So I'm leaving it there for now. I think a level that I'm going to watch the upside is right around there. I want to see if price can break kind of above this ceiling right there. That's the other thing about oil is that it had the huge spike up, and then it gave almost all of it back. It still ended green, but then today we ended up having a down day, down over 1%. I still think the prospects for oil, like going way to the upside, are big just because of macro uncertainty, inflation, geopolitical concerns, and things like that. It's definitely something that you need to be watching. So I think that oil will go up eventually, but we might get one of these pullbacks. You can kind of see that there's like this cadence or this rhythm that we have to have a pullback after a while, and so I suspect that we'll see something like that, but obviously nobody knows. It's anybody's guess. It's just something that I'm going to be watching. Taking a quick look at the equity indices. Here we are from the time of recording. We're about a minute away from the close. So it looks like we're going to close above this horizontal level. So I'll change it to green, and I'll start adjusting some of my other levels. And this is on the S&P. But one thing I want to also be paying attention to are my moving averages. On a typical basis, I don't really watch I've mentioned this before, I don't really watch the moving averages because they are lagging indicators. But in the case of, when we have these kind of sell downs and these corrections, they're really helpful to get an idea of where the momentum is. And a lot of times, even though, for example, you could see here on my 50-day moving average is blue, my 200 is red, and we're about to get a death cross, as they say, where the 50 crosses below the 200. And actually, what's really interesting is if you think about it, that's usually a lot of times that can be a solid time to buy. If you had bought on the death cross, back in 2020, look at all the upside that you've had. Let's see where else? Let's see. We also had a death cross right around in late December, or in December of 2018, and obviously price did come lower. But then obviously look at what price has done since then. So I mean, it's not science. There are no guarantees, but on some assets, depending on what the backdrop is, on the macro picture, sometimes those death crosses can be really good buying opportunities. You can see here the momentum is definitely down. We've got our 50 and 100-day moving averages pointing downward. We're getting the cross soon. We made a lower low on the Nasdaq. We have yet to make a higher high, so I'm going to be watching approximately this level, which you can actually see is where the 200-day moving average is kind of leveling out. So I'm going to watch that for the Nasdaq. And then the Dow, the moving averages are definitely they're pinned, and the 200 is starting to point downwards. So we've got kind of a confluence of things going on here. We've got this trend line, we've got the moving averages kind of crowded in this area, and then we have to make a higher high around that area, around 35,500 or so, give or take a bit. So that's going to be something that you'll want to watch also on the equity markets. The Russell, obviously the laggard, but it is interesting to note that while making a lower wick low, the Russell has not made a lower closing low from the January 27th candle. And this is actually proving to be decent support at 1920. You can kind of see back in January of 2021, you saw it act as support. And that is also doing so here. And it's entirely possible that because the Russell went sideways for most of 2021 and then has already been at its 20% down bear market level, it's entirely possible that it's basically going to kind of hold sway or maybe outperform during this period of time until the other equity indices catch up a little bit more. The dollar index, I recently posted on Twitter. I added this kind of top side trend line. I think that what we're doing is we're starting now to create a wedge, which I think is going to eventually lead to a breakdown. It might break up, but I suspect that eventually it's going to break down, and we're going to get a period of dollar weakness. And that's just my opinion. Obviously, I can be proven wrong. The market does what the market wants to do. But this is definitely something I'm watching. You can clearly see that it's consolidating sideways and slightly to the upside. And so that's going to be another thing I'm watching. Yields kind of doing a little bit of nothing the last few weeks, but holding this this trend line support right here. I don't know why I'm still looking at the moving averages. I'm sorry about that. And then Bitcoin, I showed you kind of Bitcoin's chart. This underlying resistance right here, or support, I should say, that's the channel that a lot of people have been pointing out. And we didn't get down and test it on that overnight Wednesday night into Thursday morning wick. And so as far as closing prices go, we're still making higher lows. And so that's something to note. Yeah, I mean, my outlook on Bitcoin's bullish. Everybody knows that if you've been watching my videos. And so that's the look at the market. There's a lot of geopolitical uncertainty, and then obviously a lot of discussion still about inflation and about the Fed rate hikes that are approaching in a few weeks in March. And so it's just a very uncertain market. So be very careful about taking new positions, especially if you're just trading, because the market can whipsaw you around, because the volatility is higher right now than it has been over the last couple months. And you're definitely going to want to make sure that you're responsible with your stop losses. Try not to catch too many falling knives. And that's it. That's all you can do. Again, good luck to you all. Praying for everybody in Ukraine, and just praying that all of this stuff can get peacefully resolved. And that's my update for the week. Hope you guys have a great weekend, and I'll see you guys next week.